Hello, hello, hello. So what I'm doing right now is just showing you what happened. So you see the zone right here, right? Um, see the zone, and you see that it kind of came out of it's overextended first of all into the split. It crosses this line. So if you can see this all right, what I'm actually looking at is right now is there's free space, significant free space in this bullish bar right here. This is a big move upwards. This free space. And then you see that there's a climb upwards. Here, this basing bar right here, there is a local distal line, which is right on that wick, which is printed on that gray line. And then underneath that line is the zone. And that zone is protecting free space, and it's already overextended downwards. Um, as you can see, the picture that I've taken, like I do this before ahead of time, right? See, this is plotted before it, so it's coming into play. It's crossing this distal line. It's going to break these sell or buy orders. It's going to break them and then enter into fresh demand. Um, and that's what it looks like on a smaller time frame. That's the MTF -1, which means it's not the holding level time frame. It's not the minimum candle time frame. It's not the actual time frame of a zone. This is a 120-minute zone. This would be the MTF -1. Okay. There it is. That's the actual picture. It's the same thing, but this is the picture. As you can see, it goes all the way 100% into the zone. It doesn't quite get stopped out, and then it goes upwards, as you can see from this picture. Um, see, it almost gets stopped out, but then it goes upwards. So what we have to figure out here is um, what I just did. Right now, we entered in at approximately 77.89. So I'm just gonna plot that in like a purple line. 77.89. Really? I didn't think that. I did not think I entered at 77.89. Really? That's that's not as good as I thought. 77.89. You're right. Whatever. And then so basically my stop is at this low right here. And I'm risking $888 for a total of 1650. So it's a 2-to-1, but it looks like a 1-to-1 on the chart because I entered in for a coupon. Okay, so I entered in for a coupon in here, 77.89 right here. My stop was only at this anyways, right here. I didn't even include this wick, so technically it should be here. That's what I actually entered in at, and then 77.89 is right here. Get a little bit off, at least 25% off discount, and keep in mind that this discount actually includes more than you'd think. So for example, let's say this, it goes up, it's 25% into the zone, right? Boom, I enter here. I enter at this magenta line, uh, pink purple line,
Order filled.
and then the target was hit. Boom, great, nice job, nice target, 78.50. Anyways, I get 25% off the zone. What this means is this zone I originally was going to risk $100 for, now I'm risking $75 for. But not only that, the big takeaway that I want to see is this is now a $75 zone, but keep in mind we bought it now. Now we bought this at a lower price. So this stop loss is $75 negative. But we bought it at such a lower price that if we were going to get to, let's say, this blue line, this is 1-to-1. Technically, if we bought at proximal line and sold at distal, that would be $100. Technically, a 1-to-1 move would be $100. Now, if we shrink this downwards to where we actually entered price, we're actually going to make, we're actually going to make, oops, we're going to make more than 100 bucks. So we're gonna say, all right, this zone we're actually risking 75 bucks. Um, risking 75 bucks, but it's the same amount of contracts. So actually, we're gonna make 125. Looks like it doesn't matter what we say here, but I bought it here instead of the full zone here. Instead of the full zone, which is 1-to-1 right here. That would be 1-to-1. I bought it at the pink line here, which is 75 or 25% off, right? 25% off. So now I'm risking $75, same amount of contracts. We're gonna gain 25% of that at that 1-to-1. So whatever that 1-to-1 is, which is let's say 100 bucks, we gain that chunk. So this box right here, we gain that chunk. Any chunk here, we gain um, into the 1-to-1 target. So long story short is if you get 25% off, that means you're getting 25% more reward at that 1-to-1 target. Okay, so that means at a 2-to-1 target, we're gonna make two of these boxes. You know, and this technically means we can actually. What this means is like you can lower the target one 25% off coupon. You can lower it and probably hit it sooner and more probable. But we don't want to do that. We'd rather just keep the targets normal. We just happen to get a coupon on the trade. That's all. We love coupons. So 25% off discount, it goes up, and you're not only making money on the 75% off, meaning if you lose, it's not a whole $100 for the full zone. You're only losing $75. You're gonna make not 100 bucks at the 1-to-1. You're gonna make 125. Okay, you're gonna make 125. So how to say this is this full zone right here is 0.6. So 0.6 times 10 or 60 times 10 is 600 bucks. This $600 zone. Now if you do it like this, the full zone 600. Um, oops. Full zone $600 risk, $600 reward. Okay, that's a classic. Now coupon is 0.38, so 38 times 10 um, is obviously 380. I don't know why I need that to do that, but um, oops, $380 I'm risking on the trade. Okay, and my reward now, since this is my entry price, my reward all the way up to the same blue line is $75. So that's 750 coin. So this is a huge, huge difference, guys. I can't stress this enough that right now the full zone from this proximal line to this distal line is 0.6, and from the target is 0.6 as well. It's the same thing. It's a 1-to-1. That's why it's $600 risk, $600 reward. Now, I get a coupon on the zone. I said about 25% off coupon. I'll buy it there. All right. You could say 75% off coupon and really mark it, but you're going to miss quite a few trades. So I'm just going to say 25% off on this particular zone. That's what I wanted. Or that's when I actually saw it. No. That's what I wanted. I think that's what I wanted. Anyways, got 25% off, which happens to be more than 25% off. So now it's only $400 risk on the trade, and then we're gonna make more on the outskirts. So this is the key. Not only you're gonna risk less, you're gonna risk $380 instead of 600. You're gonna make more as it goes up. For a 1-to-1, the same exact target, the same movement in price, but you're gonna make much more. I don't even know what that is. Is that double? Um, Almost double, almost a 2-to-1. You know, so the more the merrier, right? So the coupons. That's why we want coupons and trading. Okay, I just call them that. You can call them anything you want. Zone entries, that's fine. But if the statistics show that, hey, look, I mean, look, if the statistics show um, that most of the trades get in 50%, you know, in turnaround, so the trades that do work, like all these highlighted, these zones actually worked, and you can see that 75% into the zone, 75% into the zone. So you could have easily gotten a 50% off discount. 50% off coupons would have worked for all these, except these 0%. Those are turning at the proximal line. 9-to-1. This one went 9-to-1 and went halfway into the zone. You could have probably gotten the 50% off coupon and really turned that price, and you could have captured, instead of a 9-to-1, it'd be 18-to-1 if you kept the same target. Um, but once again, the way we track this is through the drawn zone. Okay, we don't track it through our actual entry price. All right, we don't track it through our actual entry price. Um, we track it through the drawn zone. So, and that's what we'll do. So obviously you can see that it went really well. Hit 1-to-1 target, and really I captured a 2-to-1 out of it. But as far as this goes, 159, zone 159, I'm gonna say that's a 1-to-1 and still counting. You know, 1-to-1 and still counting. So as this continues, that is how you want to trade. That's how, you know, generally I back tested the strategies based on, just buying at the proximal line and selling at the distal line if I get stopped out, and no movement to the PIZ, which is the pivot in the zone, or no coupons off that I'm trying to capture. So ideally, any of those little helps is going to help my equity curve. It's going to help. It's going to help the equity curve go upwards. So I just wanted to show you that. All these back tests are based on the probabilities that we've got right now using proximal lines. No PIZ, no nothing like that, um, and no coupons. I think we should use coupons totally, especially for intraday actions like this. Um, all of them, actually, we should use coupons on. Um, for hot zones, I mean, I don't know. You never really know if it's gonna enter into the zone strong like this. Um, like so far, I went 100% or 75% in. So generally, yeah, generally we would want it to go a little bit or just turn it proximal. A lot of times it does turn it proximal, it just doesn't get us in. So it's up to you. Um, it's frustrating if we miss trades and have a coupon on, but man, the coupons work so well because we captured, basically bought at the low, and we just captured a 1-to-1, which is 7 out of 10 times we're going to win a 1-to-1. 7 out of 10 times, you know, usually we'll hit a 1-to-1. So, especially for holding levels outside local distal line and overextended and protecting free space, I mean, those are generally going to hit 7 out of 10 times for a 1-to-1. So, we can kind of guarantee that, but then if it comes into our zone, might as well get that coupon off and capture a 2-to-1 for 70% of the time, and that's a huge difference in expectancy and the math behind it. It's just all out amazing, and it's all out amazing because not only it would be all out amazing if we just, one side of the equation, we limit our risk to $75 instead of 100, and we're gonna still capture 100 bucks. But no, the market doesn't work like that. The market works like you bought lower. That means that same 1-to-1 target is going to be worth more. So that means we're risking, you know, um, 308 instead of 600 bucks, we're risking 380 bucks. Instead of $600 reward, we're making 750 or 800 or whatever it is, right? It's more, it's less risk and more profit. So it affects both sides of the equations, and that is why it's a dub. That's why it's worth it. Totally, totally worth it. So we got to track our zones with using the full drawn length to keep it standard, to keep it understandable, to keep it trackable. But as far as actual entry in your account, go ahead and take coupons. Go ahead and take uh, buy the zone 50% into the zone, and um, a lot of times it happens anyways. And then just keep the targets ran from the drawn zone because that's what our data is tracking. Our data is tracking 1 to 1, 2 to 1, all from the zones that we do have here. We've got quite a few back-tested strategies here. This is the holding level strategy. There's breakouts that do pretty well. Actually, there's a ton of them that just nudge out and then stop me out. Um, so I think we have to be really careful with breakouts, but I think when they do hit, they can go pretty far. Go pretty far. Overextensions, this is everything. There's holding zones that are just not quite holding levels. Uh, Maybe they're not protecting free space or whatever. There's protecting extremes, which is just rally-based drops like this, or like this zone, or like this zone, like peaks and troughs, as we trade them as zones. And those don't work as well. I've figured the ones that I've tracked, at least, as a whole, have negative expectancy. That means we lose money over time. So we're not actually trading those. We're just tracking them still, though. Holding the other ones that we track are holding splits, or H setups, holding setups, which are kind of different. Which is kind of like this holding level right here. It's in the creation, so it would be looking like this. Like that's what it would look like. Okay, oops, you can't see it well with all those numbers, but um, it would be looking like this. Oops, looking like this, and then if it retraces or whatever into the split, it would be looking like this, and if it retraces into this wick right here, this distal line, we'll long it and then up, up, and that's the H setup. It's the actual creation of the holding level, and we'll gladly long in the creation of the holding level, and we'll long when it retraces into the holding level. So that's what we're trying to get good at here with number 3 here, holding splits or H setups, which we have a few here. 1, 2, 50, 51. I can show you quick. Um, 50, what was it, 51? 51 was an H setup reversal, and then 50 was an H setup rough. Let's look at 50 and 51. 50, you can see kind of it's an H setup where it's long here. It's not protecting free space. I think I have that marked down. Not protect NPFS. That's not protecting free space. As you can see from the picture, it's not. I mean, it could easily go into this and long it. There's no free space here. There's still zones and rough, I call it, garbage or rough, whatever you want to call it. You can see up, it goes into this zone though. We're ready to go long, and we're ready to break these highs. Um, what eventually happens is it does get nudged out. So it goes upwards, tries, and then it gets nudged out. So that one lost. This one is a reversal. As you can see, I'm like, oh, this is a holding setup. So it's going, and then it creates a big topping wick. It's on the top of a huge overextended uptrend. So we're ready to go short, and depending on where it's coming from on the higher time frame, doesn't really matter because this is pretty good. So we're purchasing at the entry prices in the middle between the stop, which is that top, and then the breakout line, which is that bottom. So if it breaks out, we're likely to continue downwards, and that's what breakouts are. Those are breakouts, right? Those are breakouts. But I can see that this zone is, I'm a premature breakout. You know what I'm saying? Like, I think that this will break this low, so I'm just going to buy it or sell short now. And then this is the high. So it goes down. So we'll see. I mean, we'll see if it works. I think it did. So it turned right as I was trying to short it. It turned downwards. Boom! It broke out. See, it broke out. Got some people that because it broke out, it completed the picture. They're buying back their shares, but it never really changed much. And I did not complete the pictures. 12:21, 8 o'clock. 12:21, 8 o'clock at 5 minutes. 12:21, 8 o'clock, 15 minutes. 12:21, 8 o'clock. 12:21, 8 o'clock. Right here. This is it. This is it. This is it. Okay, so let's take a look at the picture. Where did my entry price go? And the entry price was 11,366. You can see that 11,366, 365.79. Perfect. So this actually did break out really, really, really well. So let's take a look at what happened. It went all the way 5.5 to 1. So I sold short. We're at this distal line at the top of this peak, as the picture showed. I sold short as an H setup in anticipation. It broke out strong, came back a little bit, but then kept on going, and eventually captured that 5.5 to 1 before getting stopped out. Um, yeah, 5.5 to 1. You know that you can do it. 5.5 to 1. Okay, 51. Let's go ahead and take a screenshot of this. So that's what ended up happening. So yeah, I just wanted to show you that, show you what's going on. Yeah. So looks pretty good, doesn't it? I mean, we're gradually tracking kind of what's going on, right? And you can see that the coupons work on the zone entries. As this thing's rallying, it keeps on rallying, right? Keeps on going, keeps on going. Look at that. It's amazing. 1 to 1. I mean, it's just so cool to see. Um, so cool to see the zones that we picture, and we're really trying to work and actually do what I want it to do. And we're trying to do this mathematically. We're really trying to boil all my ideas. These are all my ideas, and the holding levels are already pretty much boiled down um, to something that we can put in production. But man, I mean, breakouts aren't there yet. I'm still doing a bunch of different breakouts. Um, OE is just overextensions, meaning just prices just a little bit overextended. But then there's I've made this family, this tab, which I call a family, all these different ones that are just zones but aren't holding levels. Okay, all zones but they aren't holding levels, and also they're H setups, which is market orders. They aren't zones anymore. They're actually like I just showed you. Um, in betweens are just in between the wicks, which don't happen very often, and they're not proven at all. So this is just really practice. This is a practice environment. Um, but what's ready for production is and regulatory environments is holding levels. We definitely have enough samples, and it certainly works. It certainly works. As you can see, it worked, right? I mean, it certainly works. Um, and we have the statistics to prove it. 134 holding levels. I mean, our win rates are here. Our lose rates, our expectancy is right here. Um, you know, our net profit over those trades is looking pretty good. Like, and this is our risk reward. So, 0.5 to 1, we're barely break even because our zones really do work further than that. We might as well capture further than that. So it kind of goes 1 to 1, you make money. 2 to 1, you make a lot of money. 3 to 1, you make a lot more money. 4 to 1, you make the most money, and that starts tapering down 5 and downwards. So I'm guessing that 4 to 1 and 3 to 1, that 3 area is that really sweet spot for our zone. But we only win 4 out of 10 times. So at that rate. But still, the most profitable is 4 to 1. But I'm not counting those. I'm just gonna say 3 to 1 because I really do appreciate a little higher win rate. It's just so much more easy going, a higher win rate. And you can see them down here, blue 4 to 1, 3 to 1. You can see the volatility. 1 to 1 is orange. You can see that it just doesn't extend very far because the winners are just cut short. You just cut short the winners so quick when they really can yield you more profits. So that's why you really got to focus on higher win rates, and that's 3 to 1 at the very least. So we'll go 3 to 1, and then we're going 2 to 1 on my other account, a 50 can account. But anyways, that's kind of what's going on. Um, Really quickly, that's what I want to show you, and I want to show you coupons, and we discovered that. I just think that's so valid. Not not valid to put in your not valid to put in your spreadsheets because the spreadsheets are already counting how far into the zone it gets. So 75% into the zone, halfway into the zone, 100% into the zone, almost stopped out, but it turns back. We're tracking that already, so we can technically, when we have enough sample size, which I want to get to thousands. This is 160 trades. I want to get to thousands as time goes on. It'll take me probably 2 years, but slowly but surely we'll get to thousands, and then we have a really good data set of how far it goes into the zone, and we can actually start implementing coupons into the specific setups, and we can just really narrow down and focus our strategy. Um, and that does not mean taking less trades. That just means more accurately taking the trades. That's all. The trades that appear, more accurately taking them as we get more data, and more columns that I'm going to create, um, because I'm going to have to create a few different more columns. Right now we're just showing the the, the setup, the recency, how long it was in play before, how long the zone was established before coming down to it, and then the magnitude, which I haven't filled out any of them yet. I just started implementing this number policy, which is working so much better. Um, Magnitude is how far the zone, so the zone's created and then it goes all the way up, so you can't even see it and then comes down. That's going to be a 6. That's going to be really highest magnitude possible. It's so far away and then comes down, so it's likely counter trend. These 3 2s are likely in trend, so that's why they work a lot more high percentage of the time. They work for 1 to 1, really high percentage of the time if it's recent and it's magnitude, so it hits right away basically, um, or soon after it was created. And then brown is just more of a free space. That's all it is. Anyways, that's what we're doing. This is ready for regulatory environment. It's ready for production. We're still going to be tweaking things as we go, but nothing's going to change in regards to what. Nothing's going to change into what we're going to do here. So we're doing $500 for a 3 to 1, $5,000 trailing max drawdown, and we're just going to see over a series of 3 months where price is going to go. We're going to start at 150. You can't see it right here. 150,000 right in the middle, and we're going to see the equity curve just as we have back tested them here. We've back tested the 150K, and we're doing 3 to 1. We're doing a 3 to 1. Sorry, 3 to 1, $500. This is it. And I'm just saying risk reward. I'm just saying you're gonna get $250 and risking 100. That's a 2.5 to 1. Really, we're getting a 3 to 1 because commissions tweak it down to like what, 2.9 at the most. We're just saying this just for safekeeping. We're saying that we make less on our wins. So it's not the most accurate backtest, but it is slanted in a way that if I win at this, I'm really likely to win in the real life. Okay, so I'm making it a little bit easier, or the backtest harder. Yeah. As you can see, the 3 to 1s have some volatility, but they really do have upside potential. This is just different scenarios of how the random data can appear, and you can see that it does go up. It goes well up, a lot better than these. Um, but keep in mind that the scaling, 62.5, this is 75,000, so the scaling all messes it up. I probably should have had it the same. But anyways, keep an eye on the orange line. That doesn't change. So you can see that it does pass the orange line pretty well, and then the gray trailing drawdown hopefully shouldn't be hit. And gradually it does go up. So I'm happy with that. I'm going 3 to 1 for 500 bucks on the 150K account, and then we're gonna go at 2 to 1 for 500 bucks. So we actually place the same order across the board. All accounts, 150K accounts and 500K accounts, all string together. We're gonna place the same order, 500 bucks, but we're gonna have our target much quicker for the 50K account. And this is what it looks like. So you do get stopped out. We are playing risk, yes. We are playing risk, but I think it will gradually go up instead. It's a 50% win rate at a 2 to 1. There's a 50-50 coin toss of a chance that it'll make it. Um, and we're going to take our risk. And it's going to be the same amount of money per zone. So if we get a coupon, whatever, same thing, 500 bucks, risk per trade, risk per zone. And then we'll have our target closer on the 50K account and then a 3 to 1 on the 150K account. And just leave it be. That's what we're going to do. So I think 500 for a 3 to 1 is somewhere here. 400 for a 3 to 1 is a little bit too sketchy. It's just a little too sketchy, even though they do work really, really well. Extends. It depends. It really depends on what happens, what we do. Um, so honestly, we're gonna start January 1st, and that's what we're doing. I mean, we've got 50K accounts ready, 150K accounts ready, and this a 50K account going 2 to 1, $500, same risk. Don't just ignore this stuff. Um, that's what we're doing, and we're trading the same zones, and it's all this zones. It's ready for the regulatory environment. We're still going to practice and track our trades in all different setups that we do have. Different families, just one, two, three, four families, but these families are split into multiple different setups. I'm really trying to distill it into streamlined strategies to track. Um, but it's hard because there's just so many variations of things, and there's just so many ideas when you do get into the heat of the moment of trading. There's just so many ideas that pop up, and I just try to screenshot, capture them, and then we go back into our screenshots and really figure out and try to organize like what looks like each other and what doesn't, and we kind of categorize. That's where I'm at for categorization. At least there's tons of segments here. I did well at categorizing these, but breakouts are pretty categorized now. But I'm still working on just distilling everything, um, all the different setups and stuff. So we don't take all the different setups all in one account because that might skew the equity curve that we do have. We really want to treat this like almost like a science experiment. We measure exactly what we need. We trade professionally and responsibly, and that's um, not something that I've ever done in my life. But we're trying. We are going to try. We are going to. That's what we have to have the attitude for. Um, yep. So this is ready for a regulatory environment, which is obviously the funded accounts, and we're just gonna do this for 3 months, man. Just send it. 3 months. Don't worry about results. Don't worry about anything. Just do it. Just do the exact holding level strategy, and that's it. Um, and that's it. I mean, we might not even have that many trades. I bet in 3 months we'll not have more than 17. Plus minus 17 trades. I bet less than 17 because we're so strict in this. We're so um, detail oriented. It just has to check off many boxes to become a holding level. Protecting free space, outside local distal line, overextended, and it has to be brown. I mean, it's just not, doesn't happen all that often. So um, that's what we're doing. All right, and that closes kind of what I wanted to get across. It was good session to think about. All right, peace, peace, peace.